Hello everyone and welcome back to our NAP. NAP stands for Nonprofit Auditor Points and I'm Irina Oreshkova, your nonprofit auditor. I design NAPs to provide some guidance and hopefully demystify some accounting concepts for nonprofits. And today we continue our nonprofit revenue recognition series. In previous NAPs, we talked about the fact that revenue is recognized in nonprofits based on completely two different standards: 606 exchange revenue and 958 contributions or gifts or donations. We also talked about that contributions can be unconditional or conditional. Conditional, the ones that have barriers and right of return the funds. Unconditional promises are, if they don't have the unconditional promises, becomes revenue right away. But if there is a barrier and right of return, it's not becomes revenue until it's substantially met. In the last episode, we talked about multi-year grants and how unconditional promise, even if it's multi-year, 2, 3, 4, 5 more, are recognized immediately. Even cash gets paid over the long period of time. Payment cash does not have effect on revenue recognition. So today I'm going to move forward to another concept that also causes a lot of confusion and even more than conditions, and specifically restriction. A lot of folks confuse between conditions and restrictions. So I want to start with something very important. Restrictions on the grants do not delay revenue recognition. If it's unconditional promise, we recognize as revenue right away, whether it is with the donor restrictions or without donor restrictions. So restrictions have no effect on revenue recognition. This is one of the biggest misunderstandings. So let's break down. Once you determine that a contribution is unconditional, meaning there is no barriers with the right of return, you do need to recognize revenue. And then when you recognize in revenue, you need to ask yourself, is there a restriction? And if it is a restriction, then you record it as revenue, but you will record revenue with donor restrictions. And if it's no restrictions, you will record as unrestricted revenue. Okay. Also, under GAAP, all the terms that we used, it was temporarily restricted and permanently restricted. New terms, it's with donor restrictions. They're all under one term, with donor restrictions. We don't say permanently restricted or temporarily restricted anymore. It's all donations with donor restrictions. Restrictions is a donor restricted limitations on how funds will be used. But again, it does not affect revenue recognition at all. It affects how revenue is presented on your financials. Generally, your statement of activities or profit and loss statement has two columns: without the donor restrictions and with donor restrictions. So you see two profit and loss or statement of activities, right? And you see one without donor restrictions and another with donor restrictions. So, but it is part of the revenue, it's just in a different column. So let's take a look at overall conceptual level. Suppose a donor gives you organization's $100,000 and says, this gift is for your general operations. This is a contributions without a donor restriction, because donor does not specify how the donor wishes you to spend money. It just says, hey, we support you. Here you go. General operations, it's not a restriction. So it's without the donor restrictions. And we recognize revenue immediately, and we classify it as without donor restrictions. So now suppose the donor gives you $100,000 and says this gift must be used for after-school tuition program. The donor specifically indicates which program, and it's for program. It still recognizes revenue immediately because it's unconditional, but it will be classified in a column with donor restrictions. But revenue will be recognized as soon as its promise is made, but presented differently. So sometimes nonprofits, when they lacking funds or current cash flow, they tempted to disregard donor restrictions, and they might use funds for something else. That's wrong. If the donor says use it only for after-school tuition program, meaning that nonprofit cannot spend the money for anything else, cannot spend on general administrative purposes, for fundraising purposes, and it's specifically for program activity. And if nonprofit have more than just one activity after school tuition program, maybe it has some summer school or some other programs that nonprofit does. So, but these funds should be allocated only for after-school tuition program, because that's how donor puts restrictions on these funds. So again, repeating that recognition of revenue and classification of revenue, completely two different concepts, and they are follow each other in their two different steps. First of all, we need to see if we need to recognize revenue. Recognize meaning record. And regardless if revenue with the donor restrictions or without donor restrictions does not affect revenue recognition, we're still going to recognize it as soon as it's unconditionally promised. But classification will be different. Revenue without donor restrictions will be recorded as revenue without donor restrictions. Revenue with donor restrictions will be recorded in a column with donor restrictions. Let's see in real life how it's going to happen. So financial statement for nonprofits includes statement of activities. Sometimes we call it income statement or profit and loss statement in our daily life. And they present them in two columns, with donor restrictions and without, right? And I know some accounting softwares do not allow that split. And you cannot see your statement of activities in two columns. For auditors, if you work with auditor that does your either annual audit or annual review or compilation, we do present statement of activities in two columns. But if your accounting software does not do it, it might be more difficult to read, but then it becomes a job of bookkeeper to present it. If it's not in two columns, then at least separate it two different lines and explain board members that this is restricted revenue and this is not restricted revenue. So sometimes organization may report increase in revenue with donor restrictions a lot and very little revenue without the donor restrictions. It does not mean it's a bad position. However, revenue without donor restrictions provide more flexibility for nonprofit, because nonprofit can spend the unrestricted funds for any purpose as long as it's within the overall mission of the organization. And sometimes organization may show deficit in a net assets without the donor restrictions. It does not necessarily indicate troubles, but it's not a very good sign. It means if the organization really shows negative net assets. On the column net assets without the donor restrictions, it means that the organization either dipping in restricted funds and spending them inappropriately, or it might indicate some other problem. But goal of every nonprofit to make sure that you don't run deficits in the net assets without the donor restrictions. It may also mean that restricted funds is covering some certain programs, and under restricted funding might be tight. Understanding classification helps board members to interpret financial statement health more accurately. Let's clarify something else. Internal decisions do not create donor restrictions. So donations with donor restrictions or without the donor restrictions do not come based on the board opinion, decisions, and wishes. It's only come from a donor. So what does it mean? It means that only donors can restrict the funds. And only donors can unrestrict the funds. So if the funds came from donor with donor restrictions, there is nothing board can do. And if the funds came without donor restrictions, board cannot create restrictions based on that. However, board can create some designation that they wanna put aside some unrestricted funds, but they will be still unrestricted. But they can restrict them internally, and if something changed, they can unrestrict them internally. But it's not the same as restriction. From the accounting standpoint, any funds that boards will designate or restrict internally are not restricted, because restriction can only come from a donor. Okay, so let's summarize. If the donor imposes the restrictions, it is recorded as revenue right away, like any unconditional promise, but it will be recorded with donor restrictions. If there is no restrictions, it will be recorded as a revenue without the donor restrictions. Restrictions do not delay revenue, only condition delay revenue recognition. So hopefully that information was useful. In the next episode, we're going to go deeper into time restrictions and purpose restriction. In this episode, we just called it restricted revenue, but it comes in two flavors, time and purpose. And we will look at practical examples and make a distinction between time restricted donations and purpose restricted donations. Thank you, and looking forward to see you next time. Have a wonderful day.